I'm Dan Fitzpatrick at StockMarketMentor.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just pushing the buy button the next morning on the stocks you saw on TV last night. I'm here to help you make money on these three stocks I saw on TV. Okay, we got Earnings Central here. So we're going to look at Netflix, Hasbro, and Yahoo. Netflix. Okay. And I cover this in a little more detail in our premium Stock Market Mentor video, the strategy session. But in essence, here's the deal with Netflix. They're not growing as fast as they'd like. Okay, when management says that, you know you've got a problem. Also, apparently, Pokemon, yes, I said it, is impacting Netflix because people play about half an hour a day. That stupid expletive deleted game. So when you've got a game impacting a stock, that's a problem. So here's the thing. Short term, I'm talking about tomorrow morning on Tuesday morning. This may be set up for a bounce because here was a low, here was another low, and the stock's trading as I record this video at like 85 bucks flat. So we could get just a reflex bounce because that's what's happened before. But what I'm worried about, or at least I'm looking at, is this. The 200-day moving average is now resistance on the stock. The stock can't get above it, and certainly isn't going to get above it with respect to earnings. So that makes me want to zoom out long term. The stock just kind of looks like it's poised to be forming a top as opposed to a little consolidation. From a fundamental standpoint, which is not my favorite thing to look at, but I can look at them and I know what I'm talking about. It's actually a more expensive stock than Amazon, which not only does Amazon have a better price, it also has a better business model. Lex Luthor's taken over the world. This one, not so much. So I would stay away from Netflix longer term. I would use any rally as an opportunity to sell. And again, I'm not talking on Tuesday. I'm not talking about Thursday. I'm saying longer term, this is a weekly chart. I think this is a top. Short term, if the stock is above where the stock bounced and where it opened tomorrow morning, if the stock is above that level within a couple minutes, 3, 4, 5 minutes, then you probably can find a good trade to the long side, but that's totally short-term stuff. Okay, Hasbro, they reported earnings that the market didn't like very much, down almost 7%. This was on Monday morning. You can see what happened. Kramer had the CEO of the company on, and Kramer actually thinks that this is a good buying opportunity. The problem is that the stock hasn't quite found a bottom yet. Here's the deal. The CEO says they're building a big global footprint. It's just really a growth story. Here's what I would suggest doing with this. It's actually pretty easy because you have to define risk somehow, some way. If you're going to buy this stock, and I certainly wouldn't short it right here. It's already made the move. But if you're going to buy this stock, you're buying it because you're anticipating a move off of the 200-day moving average. And so you'll have a stop just a little bit below that. If you get stopped out, too bad, so sad. That's why they call it trading and not winning. And then finally, Yahoo. I don't even know why I'm covering this. They reported earnings, and lo and behold, they missed. Beat revenues, missed on earnings. Not only that, but they had a $482 million write-down on Tumblr. I almost struggled for words here because that was about the dumbest acquisition I've seen in a long time. They paid $1.1 billion for Tumblr in 2013. 3 years later, they're having to write off almost half of it. Here's the thing with Yahoo. If this company was being run by Oscar Mayer as opposed to Marissa Mayer, nobody would care. But because it's being run by a gal who had her photo spread done in Vogue and basically is just a high-profile female CEO, everybody's putting undue focus on that. It's really that all that's fine for morbid curiosity, what's going to happen with the big, massive, like Lord knows how many millions golden parachute for this person. But what we really care about is the stock. The other stuff's just curiosity. I think you got to stay away from this stock. At some point, they're going to say which bidder they're going to sell to. I say good riddance. I'm sure you'll probably be able to read plenty on it on Tumblr or maybe even Reddit, or as I call it, troll it. So for Yahoo, this is probably the last time you'll hear me cover it because can't really think of a company that's more boring. Okay, I'm Dan Fitzpatrick, and I'll see you next time.